Yesterday that were not so cute at all. Same thing with retail sales and Discover credit card services. They also had earnings today that kind of goes in line with what do those three things have in common? We'll see in a little bit. In the meantime, welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm Jamal Chandler. We have a seemingly start to a volatile trading day that ended up getting a little bit quieter right about now. Markets are only down, SPOOS, I should say, is only down 10 handles right now. It was down as much as 35 to 40 at some point in the day. And we got markets trying to bounce back a little bit. Volatility's fading a little bit as well in kind. And overall, we got a couple of other things that we'll talk about that are jumping, moving around. Bitcoin's moving around. Gold's moving around. So we'll talk about that when we get to the platform. But let's pull up some slides. Let's talk a little bit about some things that, we look at a lot of these macroeconomic data points, right? And we always try to tie them back to what it means for markets and what it means for a trade. So actually, before I start, let's make sure that a lot of you who are watching on the Tasty Live webpage or the Tasty Live app, you can come over to the Tasty Live YouTube page. Get in there. Get in the chat. Type in some characters. Send me a couple of questions or even just say what's up. I appreciate that. Getting to the slides here. Look, we had the price producers index that fell more than expected. This also, you got to couple these together. You got to couple PPI together along with CPI, right? Consumer prices along with producer prices. Most of the time, PPI shows producers are passing on prices over to consumers. Here's the thing. This was down year over year, right? Mostly led by the fact that energy prices were lower and food prices were lower. Have you noticed a change in that? I'm just curious. That's actually one of the questions in our chat in the YouTube chat today. It's one of the questions that we have as a poll. Have you noticed a difference in cost? Because some people say yes, some people say no. Look, energy is hard to ignore. I mean, you've definitely seen a lower price in the gasoline you're putting in your car. I'm sure you've noticed that. I mean, if I've noticed that here in Chicago, I know that you guys have. Food is another one. It's one of those where, some things others you have, others maybe not. Theoretically, I guess there's an egg shortage right now. I don't know about that. But overall, right, you have to admit that the Fed is doing their job. Are they doing it? Do they have a plan? And is it working? I don't know yet, but you have to admit that they're doing their job because this rise in interest rates right now, we're sitting at 4.25% to 4.5%. That's our range in the Fed funds rate. It has caused PPI to come in. It has caused CPI to come in. So the prices are coming down. They're attacking inflation. That is worked out well. Retail sales, they post their biggest drop in the year. It's the second consecutive monthly decrease. Now, what does this necessarily mean? Well, it means that people are not buying as much, especially into the end of the year, which is kind of interesting, right? When you talk about theoretically a very robust time for retail sales typically was not or did not come to fruition. That's kind of interesting, right? So you're seeing that costs are down, but yet people aren't necessarily buying as much stuff with regard to retail sales anyway. That's still part of the story, but not the whole thing. Then you see something from Discover Financial Services. They had earnings today. And of all the things they mentioned, which honestly, I didn't read or listen to half of it, but here's the important part. They fell after warning that their write-offs may double, right? The idea of those who are eventually not going to necessarily pay off their bills or be able to pay their credit cards, and maybe they might have more delinquencies. We already know the consumer credit is high. We've heard about that before. So where does all this tie into the market? Well, consumer credit's high. People are using a lot more debt that they may or may not necessarily pay off. They're not necessarily using that debt to pay. At this point, they are using it probably for retail sales, but they're not using as much because they're a little bit worried about going into further debt. And costs are coming down. And it's all of this. Does this lead to the recession that everybody's been talking about? What does this do for markets? Does markets sort of go into a tailspin because of recessionary times? Or do we see more losses for consumer discretionary stocks, those cyclical stocks? Those have been the ones that got hit the most last year, most of them led by Tesla, obviously. So it's one of those concerning things. You start to wonder if we do see a recession, are we going to see more downside in some of those consumer cyclical names? And are those the ones you want to stay away from when you're selling puts? Just something to keep in mind. You know what I mean? Just something to keep in mind overall. Leftovers. Top companies adopting solar power in the United States. Let's move to the next slide, please. So these are numbers in megawatts, the total installed solar capacity in megawatts through June of last year. And these are some of the companies that are doing using a lot of solar capacity. I guess they're trying to find ways to sort of offset costs. Meta, 3,588. Now, I'm not sure if this is in relation to the metaverse or not. Maybe it is. Maybe, I guess. The metaverse revolution will be powered by solar, apparently. But you have Amazon, 1,113 megawatts. Apple, 987 megawatts. It's almost like a lineup of mega tech names that's gone wrong so far. But then you got Walmart, 689. Remember, Walmart is like, was it? I'm trying to remember. Walmart has the most land of public companies, so maybe they're trying to sort of reduce their footprint in some type of way. I don't know. 689 megawatts. Microsoft, 550 megawatts. Target, 515 megawatts. Then you got an industrial name in there, Cargill, 342 megawatts. Kaiser Permanente, 303 megawatts. Anheuser-Busch, 301 megawatts. Everaz North America, never heard of it, 300 megawatts. Kind of interesting in some way, shape, or form that these companies are trying to use a little more solar capacity. What does this do for their stocks? I don't know. Probably nothing, I guess. But it's still, you can see some of these companies are trying to reduce their carbon footprint, I guess. I don't know. Let's move to the next slide. My people in the chat, where you at? Where you at? Grumpy Mike is always up in the chat. Is that Mike? Mike, what's up, dude? Brother from another mother, how you doing, man? Oh, man, thanks, man. Drinks on the way. I appreciate you, man. You know I'm down. Let me know. Let me know when. George B, what's up? Theta Trader. What's going on? Before I get to the next slide, let me talk about this question. Theta Trader's got a question for me. Jamal, what do you think of farmland as a diversifier? REITs such as land and FPI have dividends? What? Oh, is that those are farmland ETFs? Land? Never heard of it. You know what? I would. Yeah, I don't know. I haven't looked at land before. Never looked at the name. Never looked into it. Would like to know what kind of dividend it has. I guess I could pull that up at some point, maybe look into it and see. Diversifying is not the worst thing in the world, but I don't know much about those two ETFs. I'd have to look into them a little bit more. So I'll have to see. I have to see what kind of dividend, how long they've been around. I'm surprised I've never heard of either one of these two names. Farmland Partners, huh? And they're farmland REITs? Huh. Something interesting. I could see why you maybe do it. Volatility perked up a little bit yesterday, right? Because of that sell-off. So we often look at this metric of VIX to historical vol. Don't let this fool you, though. And again, I don't necessarily think it would. I mean, you're still looking at VIX, which is under 21, right? 2037 as we sit here. And though it did pop up yesterday, this metric anyway, and vol, it only means that VIX is just nearly 5 points higher than historical vol. Historical vol from the day's move of yesterday has yet to really catch up. So that's all this really means, right? Like VIX has popped up a little bit, but it's still not super sell time, okay? That's all I'm trying to say here. Let's move to the next slide. Nevertheless, looking at volatility and the forward curve over the next couple of days, we see that we have the Fed coming up, right? See the little bump in vol. Next week is going to be quiet, it looks like, dude. Like, look at the next. You see the data point for, I guess that's tomorrow, right? And then, the next 5 days, 1, 2, 3, 4, 5, those 5 days next week look like we're going to be fairly quiet. I don't really know of much to come out. I mean, sure, we have a couple of data points, but most of them are not really worth paying that much attention to, and I don't expect vol to move around. We always talk about the Fed governors who are out there, or Fed governors, Fed presidents, whatever, Fed people out there talking. They've been talking throughout this week. Supposed to go into the quiet period coming this coming weekend ahead of the decision on February 1st. And so they're not going to be around to move markets. They're not going to be around to say anything stupid. So what's it going to be? I think next week is going to be fairly quiet. It seems anyway. You know, I hope I get surprised, but seems like it's going to be fairly quiet with not a whole lot to move markets. So don't get lulled into it and put on a bunch of short positions. We're still at 20 VIX, right? So if anything, just be a little careful. Now, I do think it won't be, actually, no, I think it won't be crazy quiet because we'll have earnings, right? We'll have earnings from a couple of people. And I wonder if the big type of earnings are the Apples and the Amazons of the world, or Amazon might be earlier. No, they're all going to kick off the week after, during the week of the Fed. That's going to be the busy week. So that we were looking at with the Fed and the payrolls, super busy week. Next week, it looks like it's going to be fairly quiet, at least according to the SPY forward curve. Let's move ahead to the next slide. So we can look at a lot of different yield curves. Most of them are going to show us that the yield curve is inverted, right? Because we know near-term yields are way higher than next-term yields. And this is one of the things that we've been talking about for a while, this idea of these inversions in these curves. But this one in particular, this 10-year, 3-month yield, is pretty ugly. It's pretty ugly. And this one theoretically is a good predictor of recessions. And so we've still been waiting on this idea of a recession, right? Like, we don't necessarily know if it's coming, but again, like we said at the top of the show, when you have a combination of all these different metrics starting to get ugly, it doesn't matter which ones you look at. I choose to look at ones that are directly sort of correlated to what we could see in markets. You know, like we just pointed out, CPI and PPI, because of what's going on with inflation, those have been of interest over the last several months. Those are starting to come down, so prices are starting to come down on things. But it's interesting, as prices are starting to come down, people are getting saddled a little bit with debt that they're using from credit cards, it would seem. Now, you would hope that at some point this starts to equalize out. We don't necessarily see as many charge-offs and write-offs or delinquencies, right? Same thing on the car front, right? On used car market. Used car market prices have come down tremendously, but a lot of people who own those cars are not going to be able to sell those back at the price that they want to. And they're locked in, some of them are locked in at higher rates on some of these cars, especially if you're getting them now. So these are interesting things that start to paint this picture of whether or not we're going to have to deal with a recession, whether or not this is going to affect certain consumer stocks in a certain way, and whether or not we'll be able to trade them in the way that we want. We'll have to wait and see. But keeping an eye on this. This thing just inverted deeper. It was at 100 basis points. Now it's negative 130 basis points. So been quite the change. Even over the last couple of months, this has been quite the change here. Let's move ahead to the next slide. I tell you, man, I've been keeping an eye on gold and silver recently. Gold is sitting at the highs of the day right now, but over the last, I guess 2 months, this is from the beginning of December, the one that has really outpaced the rest has been copper, especially over the last couple of weeks. Now, a lot of people attribute that to the fact that China is sort of coming back online, so to speak. They're getting out of that COVID-0 situation. And possibly there might be an economic rebound. Again, you know, copper is one of those industrial materials that's used in a lot of different ways, especially when it comes to building things. So this is one to keep an eye on. What's going on here? Of course, Slash HG. I don't really trade copper, but you can also, you know, there's Slash HG, but there's also FCX. That's one of the bigger copper names, and you can see like that chart's at the high end of the range right now. I think there's another name too. At least they're used to it. It's SCCO. Yeah, SCCO is still a name. Sometimes I've been in the game so long, I forget if a name is still the same name. Like one names I still type up every now and again, CSTR, is Coinstar. It used to be Coinstar. It's not Coinstar anymore. But, you know, you kind of like, you forget certain tickers every now and again, or you still think one ticker is what it used to be, but it's not anymore. You know what I'm saying? Yeah, anyway, SCCO, still a copper stock, so that's cool. And FCX is probably even bigger. It is even bigger. So those are different ways you can play the copper rebound if you don't want to play the copper futures by itself. Totally understandable. Let's move ahead to the next slide. Big earnings tonight. Netflix is on the way. The biggest thing I think that's going to be in this earnings is how much the ad-supported tier is working. I mean, that's got to be their biggest thing they have to answer, right? Today, I think it is. PPG has earnings. I haven't traded that in forever. That's isn't that like a paints name? I believe. I forget what they are. So it's a chemical company or something like that. I forget exactly. They have a bunch of stuff that they do. Ally Bank, there's a couple of different, what I would call like kind of regional banks. There's Ally, there's Regions Financial, RF, there's Huntington Banks. They have earnings. There's Ericsson, which is not a bank, but also has earnings. Schlumberger has earnings. I told you guys about my Schlumberger story, right? I almost worked there. I thought about working there. I went there on an interview years ago after I finished my master's. Almost worked there, but it just didn't work out. It just wasn't. We as soon as we did a tour and as soon as we did we went to an on-land rig, went in there and tried on the hat. And it was like being in the war room, and because you're supposed to it was like one of those situations where I'd have like a team of 3 or 4 people under me, and I'd be on a rig and looking at data and analyzing and making decisions. I put that hat on, man. Wasn't a fit. Didn't feel right. So that's my Schlumberger story. Never went there to work. State Street also has earnings. Fiduciary banks. Existing home sales are coming up on Friday. I'm going to go out on a limb and say they're going to suck. It's probably not going to be good. I can't imagine existing home sales. I don't think that many people are moving in mass. It's just a guess. I don't know. Too expensive right now. January options are going to expire on Friday. Theoretically, this should be a sizable expiration. Of course, we're already stuck in the expiration magnet right now, and we're going to be in and around 3,900 probably. I don't expect any huge moves, but maybe I'll get surprised. Number of S&P 500 stocks above the 50-day moving average, 259. Yesterday's move really whacked us down. Let's move to the platform. Looking at SPY. SPY is telling you exactly what it thinks of potential moves. $3.33 for tomorrow's straddle. You divide that by 390, you get something probably like 0.8, 0.9% what's I should say 0.8, 0.9% expected move in either direction over the next 24 hours up until tomorrow's close. So not expected to be a big move. What is expected to be a big move? Well, I don't know. Let's take a look at Netflix. 322.5. We'll just go right there. $30. That's nearly a 10% move. Looks like 8 and change, 8.9. I don't know. What is that? As Vishwas was asking. Hope I'm saying that right. Sorry, Vishwas. $30.20. Take that, divide that by 322.5. 9.3, 9.4%. It's expected to move. I am not opening any new positions. I've had the same position on for a while now here, which is the calendar spread. The 350 calendar spread. I'm short 350s in Jan, and I'm long the 350s in Feb. So yeah, I think that $30 move, I'd be okay with it. Of course, I'd have to make a decision whether or not, I probably would just close the whole thing out if it does that tomorrow, because obviously I'm not going to let this thing just sort of expire in the money. At least I don't want to. So I'm just going to have to hold on to it. In the meantime, I probably could turn this into a diagonal right about now. I just don't know if I want to. I could move this to the 360. I don't know if I really want to do that, though. Do I? I don't know. In the next month? Let's see how that looks. Pay 15 cents for it, short the upside 360. I got a $10 wide diagonal. I don't know if I love that. I don't know if I love that or not. This thing is so jacked, though. And again, I really don't know what direction it might move. I'm going to hold it for now. I guess I'm just going to keep it. I don't know. I was liking it a whole lot better when stock was down to 318 early in the day, because then if it rises, cool. But I'm interested, and like I said, I think the biggest thing for them is they're going to have to address how that ad-supported tier is working for them. That's been the big news. The big news last year was about in April, really their April earnings, when it was like, okay, we got to fold in the towel. We need ads. We're not doing as well as we have been, and as much as people pushed back on it, that was kind of the move. And so you've seen more recently, as the stock started to rebound, it's been sort of like you'll hear different whispers of, oh, the ad-supported tier thing is working out well for them or whatever. So that's kind of their big hump that they have to get over. Other than that, What else? Oh, it's definitely bid. I mean, those are definitely kind of bid. What are the other earnings? What did I say? Oh, PPG. Again, I'm not trading this thing, but when you look at it from the standpoint of the move, fairly muted move expected here, $5 and change. Yeah, that's probably like what, a little under 5%, 4% or something like that. Not interested at all in this name. Does have looks like a fairly high IVR though, 64. Wow. What's the chart on this thing look like? Ooh, that got beat down over the last couple of days. Yeah, I just, yeah, nothing. Not interested. Ally. That's been, yeah, it's a bank, man. 74 IVR. Whatever. Dollar cheap options. Not interested. I just like, if I'm going to trade names, I usually like them to have the potential to really kind of do something on a move. I don't know. Schlumberger has been fairly quiet, even in the times of oil earlier this year when oil was making moves. I feel like this stock has been pretty darn quiet. It has had a strong rebound, though. Look at that. It was trading 30-something and change back in July, and now it's trading nearly double. But not interested in Schlumberger, and State Street also not necessarily interested in. The banks, I mean, they didn't have the best earnings, right? Like the Goldmans and the JPMs of the world and Morgan Stanley. I mean, Morgan Stanley gave a good forecast going forward, but the banks weren't necessarily that great during earnings. So I don't know what, State Street is a little bit different than some of those guys, but still something to pay attention to. How do I feel about WBD? Yeah, I was talking about that name the other day. It's had somewhat of a small bull run over the last couple of weeks as we started the year when you look at it. And I think you can, that's one of the things. You bring up a good point. With Netflix earnings coming up, these names are going to probably move. WBD, Paras of the world. I mean, a lot of they're content related, right? I know there's several other names that sort of fall into this category along with Netflix. So keep an eye on those, some of these outlier moves. As a matter of fact, you can also play these. These are what we like to call like a free look. You can play these names on Netflix's earnings, right? I know I'm sure you got, I can't think of all the different other names that sort of tie into Netflix, but there's a bunch. And so keep an eye on a lot of those as you're looking at trading earnings, because you could, again, play those along that. Brandon Hahn, what's up, man? You saw me in CA? Saw you in California singing Hollywood like a boss. Thanks, dude. I appreciate it, man. It's all, you know what? Because Sosnoff said I couldn't sing. He said I had no voice. I had to show him. I had to show him a little bit. Show him the pipes, the vocal cords. You know what I'm saying? Yeah, so WBD is one I would say where I almost like, it depends on what fashion you're looking at it. Are you looking at it just for a trade? I don't really like trading in the options in here. I'm not really a fan of trading like such low dollar stock options unless it's something that's crazy bid, which usually means it's a little bit more risky. This is somewhat of thankfully a more a high volume name that is a little bit more. Is a little bit more safer, right? And so I don't really, I've been looking at this and I've been looking at Para for sort of long-term holds. I just haven't made a decision yet. I haven't committed to them. Para is a little more interesting because it does have a dividend. WBD does not, but both of them are content providers, and I do think they're going to have some moves along with Netflix tonight. So we'll see what ends up happening. Other than that, I have done a few more Iron Condors, people. I did a Iron Condor. I just kind of like doing these. They're sort of ways to play the market and play out my theses in the market. But also, like there's only one that I have a put Iron Condor in right now. This is $25 wide. 39.25, 3900, 38.75. This is for the Feb 3rd expiration. The idea here is maybe we stay around the current level where we are. Probably won't stay. I'm sure we'll, oscillate a good bit over the next 2 weeks. But the idea here is maybe we don't necessarily, we end up rising next week somehow, but then we fall back to these levels just based off of what happens post-Fed and post-non-farm payrolls. I also have an upside one in that one. Actually, this was my first trade, but that's another story. I put on some other further upside ones recently, and $50 wide. And Feb expiration got the 40/50, 4100, 4150 call butterfly there. The optimal there is that we get to 4100 for some reason or another, and sort of stick around in that level. I got it wide. I got it $50 wide. So anywhere in this range between 4050 and 4100, or 4100 and 4150 will suffice for me. And I did the same thing in the February 10th expiration, if it just so happens to do it before then. But other than that, I've been careful not to put on too many positions. I don't necessarily love the idea of selling a bunch of vol right now. I did have on a NVIDIA put spread from the other day, just in case, the stock had a strong move in recent times, like 7-8 days in a row. Figured maybe it would pull back. It pulled back not only yesterday, but a little bit today. So I was able to take that position off. I had what did I have? The 180, it was $15 wide. I had the 185, 170. It was only 20% gain. I just decided to close it. It was a good time. Just a little scalp in a way. Other than that, not a whole lot going on. Not a whole lot going on. I still have this gold position that's starting to move. Gold is closing in on, or GLD is closing in on 180, and GC is closing in close to 1950. So keeping an eye on gold, as we talked about, we've seen sort of this kind of bullish movement in gold, as again, it's still weird, right? Like inflation is coming down, but gold is actually going up. But again, gold is moving with in terms of real rates. So keep that in mind. For now, that's all for the show, man. That's all I got. You still here? Little Ferris Bueller. Thanks for watching the show. And as always, be smart, be patient, trade small, trade often. I'll see you guys later, man.